Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, February 26th. Okay, yesterday we had a little different flavor to what we've been experienced earlier in the week, where if you'll remember, earlier in the week we had the Qs under a lot of selling pressure, with gap downs multiple days, only to see them gobbled up by the dipsters. And we talked about that yesterday in terms of that's been the automatic response of traders. Traders keep doing what has worked in the past. And yesterday was the first day in quite a long time where, to be frank, the dipsters got run over. You know, they tried to do what they did Tuesday and Wednesday by that morning sell-off, and they were able to bounce it, but then price rolled over and went against them towards the end of the day and into the close. And really the playbook or the catalyst, if you listen to pundits, is the 10-year yield. Yesterday yield was up over 10%, up into the 1.52 area. And actually, there was a terrible 7-year bond auction yesterday afternoon, which spiked yields up to 1.61. And that's going to be important down the road, because even though price did not hold that and pulled back in towards the end of the day, we now closed above 1.5 on the 10-year, and now we've got a marker up at 1.61. I would not be surprised if in the days and weeks ahead that yield finds its way back for at least another test of 161 on the 10-year. So if we look at the effect on TLT, really getting this waterfall look, and that speed of the yield rise and the speed of the bond sell-off is accelerating, and that's sending some shock waves through the equity markets as well. So price here is coming into this support level that I have at 136. You can see there was a deep look, didn't quite get there, and then closed a little higher. So I'm going to be watching this 136 very carefully in the in the days, weeks ahead, because if that were to break, then all hell is going to break loose, because then there is less and less technical support. Over to the left here, as you can see, it starts fading away, and then we could have a real runaway situation. That's not my base case. I think that price will come into this 136 area and then do some consolidation for a while. So anyway, that's the view on TLT. Now let's move into SPY. Things took a turn for the worse yesterday in SPY. Why? Because, well, really for both SPY and IWM, let's just take them together. In the prior sell-offs earlier this week, when while the Qs remained under pressure, the dipsters came and bought SPY and they bought IWM. And you can see here with that first look below this 385, they bought it up and then put in another green bar on Wednesday, and that recaptured the 20 and 8-day EMA. But with yesterday's action, off 2.4%, price dropped back below the 8, back below the 20, and below this 385 pivot. So that puts SPY in kind of a precarious technical posture, from the standpoint is that there's an open door to the 50 EMA. And whenever you have price get below both the 8 and the 20 EMA, you've got to become much more tactically defensive, because price has shown that it has not had the power to stay above those key fast moving averages. So now you've got to be looking to the downside for a follow-up move. And if you're wrong and price pops back up above 385 and recaptures those fast moving averages, the 8 and the 20, so be it. False alarm. But you cannot, in my opinion, just blindly hold on to all your longs without having some hedges in place or a contingency plan for what I would anticipate would be a move at least to test the 50 like we did back here. And if the 50 were to break, then you're going to see some accelerated selling. So let's look at the 2-hour. Here was the ramp up on Tuesday and Wednesday, and then it rolled over hard yesterday and took back that whole move back to test these lows at 381 yesterday. Now notice, for me, this is a logical target, this gap right here. We have not yet touched it. You may get a touch today, and then an initial bounce. But I think with them being this close, I think if the Bears have any power at all to get follow-up selling, I think they're going to try and fill this gap. So I would be honing in and keeping this 379.65 front and center as a location for a potential tag and initial bounce. And then if it rolls over again, then that's when you usually get the gap fill. Unless there's some real heavy selling right out of the gate, I doubt that it's just going to go through that first tag. I think there's going to be at least a hesitation or a bounce there today if we decide to go lower out of the gate. 30-minute chart. Just to zoom in on what we just talked about on the 2-hour, you can see price came down yesterday, made a low similar to this area here where we saw it on Monday, and then put in a bounce and then rolled back over. So I think 381 is going to be important this morning, as is 380. And if you watch ES, the SPY or the large cap futures, 3,800 is a great line in the sand that it has to hold in order to kind of stem the selling. I went back and looked at my ES charts, and 3,800 has been the low that has held during this sequence. So bulls are going to want to step in there and hold the line if they can, and that is a location that bears want to crack and then fill this gap down to 3760 on ES. Qs. We've been focusing in on the selling pressure in technology. Now price has lost all the fast moving averages, the 8-day, the 20-day, and the 50-day, and is down, well below the 50, and pressing against this gap here at about 310.25. So for me, I think that's the next technical target for price, is to fill that gap and then start taking looks below 307.50 and possibly come all the way back down into 297. to have that pullback there. And you can see where prices come down really close to this technical level at the top of the gap, and has since held. So I think today we'll get, at least a test of that to see if there's a willingness of the bears to keep the selling up. And you can see that more clearly here on the 2-hour, this gap here at 310.25, a $2.75 wide gap down to 307.54. And then if 307.54 were to fail, I think you're coming back into 300, that 300/297 zone down here below on the Qs. This chart is not going to be very much use this morning until it recalibrates after the open. But you can see here where price came in and was held up at 313, and with that look down below towards 311 in the top of that gap. As I mentioned, did not work for the dipsters yesterday who bought that opening down candle. Rallied it and then it reversed. I still say 217.50 is the important pivot level on IWM on the daily chart. That said, there's a bearish technical posture here as well. We've lost the uptrend channel. Prices below the 8 and 20 day. Still above the pivot at 217.50, but a break below would target this 210 where the 50 EMA is. And that's, it doesn't look like a lot on the chart, but that's $7.50. So for my money, if price breaks down under 217.50, I think you can set up a swing trade lower against that level and then look for a move to at least tag the 50. And I think that would be a worthwhile trade to make. Here's the exploded view with price coming back into this down channel. So here at 218.61 with the key level being 217.50 right in this area here. 30-minute chart, here's that 217.50 area, clear and well defined. If you got a break below that, I think you've got a price void here, and not a ton of technical support here. I think price would have a relatively easy time coming in here towards 210 over the next several weeks. Facebook, this sets up really, really well depending on how the opening goes, or where the opening comes in the regular session. You can see prices come back to test this level, this 254, 255 level. If price breaks below, I think you're going to have a quick run to 250, and that would set up a move to come down and test this big gap from 245 to 235. And so, below 254, I think is a swing trading opportunity to look out at least, a week or two to take a tactical short on Facebook and look for a move to at least 250, if not 245, to back test this low back here where it tagged the top of the gap, come back in again, tag the top of the gap. I think that would be a nice swing trading setup, and I'll remind you that today, being a Friday, And with some selling pressure looming, don't forget, if you're so inclined and you're nimble and you've got some, gains on the week, it could set up for a nice lottery pick or two, where you can get, something cheap, a little bit out of the money, and hope for a Friday afternoon flush where, everybody and their brother wants to head for the exits before the weekend. That's that has the potential to happen today. So, don't be reckless about it. Don't be a putz. Just get something reasonable if you want to play for that kind of a thing. Expect to take a zero, right? That's what lottery tickets are. Most of them end up being worthless. But if you can catch it right, you can, make a lot as well. Just don't go off the deep end and, throw away a bunch of money on lottery tickets on a Friday afternoon. But this setup, all I'm saying is, given what we've been through this week, how many people out there are going to want to load up on risk, heading into the weekend? I mean, do you want to go balls deep long? Do you want to put on a bunch of long positions today? I don't. And I'm wondering if that might be the feeling for everybody else as well. So, anyhow, I think I made my point. Apple, 120.50. 120.50 is your pivot. A break below that, we should come back and test this low earlier in the week at 118. And then if that breaks, you're down into the 115s on Apple. Very weak. If you look at the charts, this one looks totally different than the other ones who saw big bounces. This one never really bounced at all. Tesla was down 8% yesterday. Had this big rally, we remember, got right to the top of the channel and was rejected. So for today, I see 675 as your pivot. And I believe if price goes below that, you're going to come in here for another test of 650. And I put a little reminder here that level, 650, is where the trend line, the daily trend line, comes in off of the March lows. So that's a big area of support at 650. And if that were to break, a couple things come to mind, is that price will come in here to 620 to back test this low, but also price will have violated the uptrend line off of the March lows, and then that would put Tesla on a triple official sell signal, having lost the trend line. So that may be significant. And also, don't forget, ARK Invest, Kathy Wood, she made a big buy right here, and she let everybody know about it. $175 million into Tesla on this day here. And, part of this rally was probably due to, her pump and her buy. Good for her. But now as it comes back, and if that were to fail and, ARK Invest get some redemptions of people bailing out on tech, they may have to start digging into Tesla, selling some to generate liquidity for themselves to meet their redemptions. So this is going to be an important one to watch. It's ARK Invest's biggest holding, from what I understand. Microsoft, look lower as long as price is below 230. I think the door is open to 226. You can see here a relative void in volume over price. It starts to fall away quickly. I think you can have a swing short against 230 and look for 226 and then 222.50. Amazon, the free 50 club worked again. We were up here. Price opened higher and then let go below 31.50, and you got a $100 move. First you got 50 and then you got 50 more. So the free 50 club gave you a double yesterday. Gave you 100 instead of the normal 50. Now today, Amazon is one of those names that people like to play on the lottery picks, because if this level goes in here and there's some heavy selling pressure, you could get another $80 to $100 move down here to 29.80, 29.50 area. If you go back and look on the daily charts, that lines up well with a prior low that held. So, below 30.50, below 30.60, I think you gotta look to the downside. And if price is able to, bounce back or recover, then the urgency or the, impending tactical short needs to be held off as long as this level holds here at 30.60. Google, big ramp, gave it all back. Now it's testing this 2000, which was the low area of earlier in the week. And just keep in mind, within the gap here, there is zero. I mean, that's why you call it gap. Zero technical support in this area. So the last stop on the train ride is this prior low right in here. And if that can't hold, then you're going to see a gap fill all the way back down to 1930, 1920 area. So that's another potential lottery pick for today, or even just a swing trade in the next week. If it loses this, you can get some, 1985 puts for a week from today, and then look for a move $60 to $65 lower to fill the gap by the end of next week. Netflix looks different than the other charts, doesn't it? Look at this nice big candle at the end of the day. When the other stocks were fading into the close, Netflix was actually rallying. So this is one to watch with that 545 pivot. As long as it can hold that level, I think you've got an open door to 554. And if that pops, 570. I don't know if it's going to have the horsepower to do that if there's a lot of selling today. But if there's, if the dipsters step in today and everybody wants to get bullish into the weekend, this may in fact get some upside follow through here. So be aware of that one. And, the converse is also true. If it loses 545, then your first target's going to be 535, $10 lower. So let's do a quick recap here. 24 minutes into the video. Yields remain in focus. The rapid rise in bond yields has spooked the market. Most of the selling pressure has been focused on the Qs and the high flyers, the bubble stocks, etc., mega cap tech. But yesterday something changed. And what changed yesterday is that the sell-off became much broader based, with SPY selling off 2.5% and IWM selling off 2.5% or more. On SPY, price is now below the main pivot on the daily chart, which is 385. below the 8 and 20-day EMAs. And whenever you're in that situation, you've got to adopt a defensive posture and assume that price is going to go to the 50. And as far as your holdings go, you either got to lighten up on risk or have hedges in place, because I don't think you want to just sit idly by with the mentality, oh, it's going to reverse, this is enough already. And don't forget, we also pointed out that yesterday was the first day that, in a long while, that the dipsters got run over. They tried to do what they did Tuesday and Wednesday, which was buy the dip, and they got paid fat for doing that. Yesterday they got run over. So that's going to be, your last trade's always at the top of your mind. And if there's a dip this morning, I haven't really looked at futures where we're at right now, but if there's a dip on the open, my question is, do the dipsters rush in on a Friday ahead of the weekend, just happen to get long? Or do they say, hey, wait a minute, that didn't work out so well yesterday. I think I'll just wait and see how far the selling goes. So we could see some follow-up selling. And then towards the end of the day, we'll need to decide what we want our risk exposure to be heading into the weekend. What do we want to have long? What are our conviction longs? And do we want to have any puts in place, either for a directional bet or simply a hedging bet, so we can keep more of our longs in the on our books with the selling in the background? So a lot to think about, but hopefully the levels and commentary will help you navigate today. If you're new to the channel and you found the information helpful, I'd really appreciate it if you hit the subscribe button and the alarm bell. That way you'll get notified each and every time I publish content. And if you look over in the show notes, you'll see links to the blog site, which I will hope you find a lot of interesting and helpful information, along with a place to register for my content, where you'll get an email each and every time I publish, and that way you won't miss a beat. Midday or over the weekend, anytime I publish, you'll get an email with that content. So let's keep our game faces on Friday as we wrap up the week, and I will talk to you next time. This has been Chris Buss with Traders Profit Compass. Talk to you soon.